What's going on, people? Welcome back to another video. If you've been tempted by flashy ads and fake trading gurus trying to convince you that Forex is your route to overnight riches, let me just stop you there. In this video, we're going to be breaking down 10 common misconceptions that beginner traders have when they get into Forex trading. And trust me, some of these might actually surprise you because most people don't even talk about them. But make sure you watch this all the way through and stay to the end because I'm going to be telling you where to go and find some completely free trading resources that will help you get into trading or potentially improve your current skills. I'm going to keep it really simple, no hype, no fluff. I'm just going to tell you what Forex trading is, but also what it isn't. Misconception number one, that Forex is a get-rich-quick scheme. One of the biggest lies that beginners fall for is that Forex trading is one of the quickest ways for you to get rich. You've probably seen these ads with these yachts and these young lads in Dubai, and they're trying to convince you that you can make riches overnight because they've done so and that's why they're there. It's all a load of smoke and mirrors. It's not real. It's all a rented lifestyle. But a lot of people get dragged into this because they think, oh, if I just copy this guy must know what he's doing because he's in Dubai, as if you can't go and book a holiday to Dubai for a couple of grand and stay there for a week and get loads of content. People don't understand that. But this is why people get drawn into thinking that it is this get-rich-quick scheme. Forex trading genuinely can be profitable, and in my opinion, it's one of the best high-value skills that you can learn, but it takes patience, it takes discipline, it takes you picking yourself up when you've done something wrong. It's like any other skill, and people seem to think that it isn't, and I think, social media has got people into this mindset that it is just this quick fix to all the money worries that they're having. They might not like their job, and they need to jump into something right now to start replacing their income. The reality is that Forex is a long-term skill and it isn't a lottery ticket that everybody seems to think it is. Misconception number two, you need a lot of money to start. Many people think you need tens of thousands of pounds to get started with Forex trading. Not true. So thanks to leverage and micro accounts, and you've got prop firms in the picture now as well, you can actually start from as little as 50 to 100 pounds. But there's a big but, and this is critical. Just because you've started with a small account doesn't mean that you're going to be expecting big returns fast. Small accounts should be only used for one thing, and that is learning. You're not trying to scale your account, you're not trying to flip your account from 100 to 200 to 300, because that will embed bad habits when you try and pursue trading and grow your account in general anyway. So you need to make sure that you've got the right mind frame towards what it is what you're doing. Small accounts are just used for learning and not for making a living. Misconception number three, more trades equals more profit. Beginner traders often think the more they trade and the more they get into the markets, the more they'll earn. That's like saying the more you gamble, the more likely you are to win. But it just doesn't work that way. In Forex, overtrading is one of the fastest ways that you can blow your account. Smart traders are patient, they only focus on the high quality setups, and capital preservation is at the forefront of what they do every single day. Misconception number four, you have to be right all of the time to make any kind of money with trading. Or another myth, you need 90% of your trades to work in order for you to be profitable, and that's the only way that you'll ever make money. Completely false. In fact, most traders, profitable traders, only win in the region of 50 to 60% of their trades overall. There's two things to think about. You've got your win rate, which is how often you win, and that's on a percentage, so you might be a 50, 60, 70%, and then you've got your rate of R, so your risk to reward. You may have a 50% win rate, but if your winners are bigger than your losers, a lot of people would think 50%, you're not making any money. Well, no, because your winners can be that big and your losers can be that big. It's all about the difference between your winners in terms of pips or profit to your losers and how much you lose when you're wrong. Misconception number five, you need to be in front of the charts all day, every day. New traders envision a successful trader to be someone sat in front of multiple monitors for 12 hours of the day. Yes, that might be the case if you're a full-time scalper, but that is not for everybody, and that is actually only the minority of people. If you're a part-time trader, you can trade the higher time frames like the 4-hour and the daily. That's what I do personally. Set alerts, use stop losses, walk away, wait for the market to give you what you want instead of going to war with the markets every single day. You do not need to be glued to your screen. And in fact, for new traders, that can actually hinder you because the more you watch those candles go up and down and you're micromanaging every single tick, that can absolutely blow your brain apart. So for new traders, it's important that you adopt a trading strategy that allows you to just go about your day, not very time consuming. You can take your mind away from the charts to an extent. And that's generally when new traders will find a bit more success. Misconception number 6, leverage is your best friend. Leverage allows you to do one thing. It lets you control larger positions in comparison to your account size. Sounds brilliant, right? The more leverage, the better. You put £1,000 into a trading account, you get 1 to 100 leverage, you've got 100 grand's worth of buying power. Many traders don't realize, but this cuts both ways. High leverage increases both your profit, but also your risk. Many beginner traders, and I've seen this so much over the years, they use high leverage and they completely blow their accounts. Most beginner traders should stick to low leverage until you truly understand it, but also you know how much leverage you need. Most people don't need 1 to 100 leverage. Common misconception number 7 is fundamentals don't matter. You can only use chart analysis to be profitable as a trader. Now, some traders swear by technical analysis, candlestick patterns, indicators, all that stuff. I would class myself as more of a technical trader, but it's really important that you do not neglect the fundamental side. But this is where they miss fundamental news events like interest rates, jobs reports, these things that significantly move the market. Even if you're a purely technical trader, you need to understand and keep abreast of what is actually happening for that week ahead, because you don't want to end up being stuck on the other side of volatility. And you need to remember that the movements that happen in the markets, the big movements, the fundamentals that drive those are always going to be stronger than your technical setups. The way I see it is fundamentals will be the push and your technicals will be the entry and the exit. Misconception number 8, robots, AI bots, whatever you want to call them, signal groups, these are going to do it all for you, and you don't need to do a single thing yourself because there's this holy grail system or whatever that's going to deliver you a constant return every single month, and you don't need to do a single thing and it's all passive. Buy this expert advisor or join this signal group and we'll trade for you. You can copy our signals and this is going to be your route to financial success. What you need to understand about these things is they are strongly driven by affiliates. There is a motive behind them that the person running it, if it's an AI trading bot or it's a signal, most likely there's going to be some kind of broker affiliation. So with a signal group, the way it normally works is you deposit money with their broker, they masquerade it as, oh, this is free, join our free signal group, our free community, look at all these people that have made money. And then you join and then they say, yeah, you need, obviously you need to deposit money with a broker because then you can't make money. But then that triggers their commission. And these groups and these bots, they're not incentivized for you to trade well, they're incentivized for you to trade often. Because every trade you place, whoever's running it is then going to get the commission off the back of your trades. So they're not even that bothered whether they feed you good signals or bad signals. I've heard some absolute horror stories about the way that some of these groups are ran, and a lot of them are being looked into by the FCA, which is the regulatory body within the UK. So hopefully a lot of them get fizzled out, but unfortunately, this is one of the routes that people mainly get into trading and discover it. And then they get stung with these things and then they think, oh, trading's a scam. When in reality, it's not. You've just got into it in a bit of a weird way and now you've lost money and you'll tell everybody that it's a scam when it actually isn't. Number 9, you can trade without a trading plan. Flying blind while trading Forex is like driving in the night down the road without your headlights on. It's so important you need a trading plan. Basically on what to trade, when to enter, when to exit, how much to risk. You need to know all these things and you need to plan these things in advance. If there's no plan, there's no consistency. If there's no consistency, there's no profit. Proper preparation and planning prevents poor performance. And number 10, once you learn it, you are set for life. One of the toughest pills to swallow for me initially was gaining that understanding that the markets evolve. So what you did 2-3 years ago may not work as efficiently in 2 to 3 years time as the market moves on. Conditions change. Learning to trade Forex or any asset for that matter, it's not a one-time event, it's a constant learning process. Even experienced traders continue to learn, they adapt, they evolve their strategies over time. The market doesn't care about how much you know, it rewards how well you adapt. Now I will preface that and say it's not like you're going to have to completely throw away your strategy and adopt a completely new one. It's most likely just making small incremental changes, gathering the data, seeing what needs changing. If your win rate drops, how can you improve that and bring it back up? But that is just what trading is. 90% of the time you are honing your strategy, getting the data, seeing what works, seeing what doesn't. And that's it. And also a little bonus tip for you. Trading is 80% psychological. Surprise, the biggest success factor within trading isn't your strategy. So all that strategy hopping you're doing isn't doing a single thing. It's completely your mindset. Fear, greed, revenge trading. These kill more accounts than bad analysis ever will. Controlling your emotions and sticking to your trading plan, having a system is honestly the superpower when it comes to trading. Doesn't matter what asset you're in. So there you have it, the top 10 most common Forex trading misconceptions debunked. Which one of these caught you off guard? Were there any that you weren't expecting? Was there anything on that list that I didn't cover that you feel is definitely a misconception, a common one? Let me know in the comment section down below and I'll reply to every comment that gets posted. If you are serious about trading, make sure that you have subscribed if you haven't already. Hit the bell for notifications of when we release a new upload. Smash that like button and head down to the description. As promised, there is a free trading resource there for you, which should help you along on your trading journey. And again, thanks so much for watching and we'll see you in the next one.